Hello, everyone. My name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is October 7th, 2021, and Bitcoin is looking corrective. Corrective? Is that even a word? I don't know. It's looking like it's in a correction, okay? And it's basically what we've been saying for the past few days. We're looking toppy, we're topped out. Everything's screaming that, right? Let's go on the larger time frames. Let's go on the 12-hour time frame. We're up there, right? Clearly on the stochastic RSI. And just, common sense. You just had a 5-wave impulse, right? You don't even have to know Elliot Wave analysis. You just know, it's just common sense. Anything in nature, what goes up must come down. Things have to correct. Things go in waves. Nothing goes up in a straight line. We all expect, well, not all of us, but many of us expect Bitcoin to do amazing things, to have a lot of positive price action this bull run, but it's not going to go all at once. It's going to do so in steps, okay? And we just had a massive run up in 5 waves, okay? And even if you didn't count the 5 waves, you would expect some sort of correction, right? So this is what kind of surprises me, that a lot of respectable analysts are they're even considering the idea that we may continue up from here without any sort of correction. Which doesn't make any sense. We literally never ever have seen that kind of price action. Even in a parabolic run, you do get fits and stops rather. Okay, so back to the smaller time frame so we can see what's happening. And this is why yesterday's video was titled "Wait Before Entering or Getting Involved in Bitcoin." And obviously on this channel, we use Bitcoin as a proxy for the cryptocurrency markets at large. I understand that certain projects may be running and doing their own thing. That aside, I'm not talking about exceptions. I'm talking about just generally speaking, things are going to correct now that Bitcoin has sort of come to a top, and buyers are being exhausted and sellers are not are looking to take profit. Okay, so yeah, I mean, you just don't need to know much about technical analysis to look at that and see that that looks like a top. It looks rounded, okay? For those of you who saw my video on how to make a perfect entry on a long position, we could use the same theory here. And let's get out our curve. Oh yeah, I got it right this time. I don't know why this curve works from right to left. I don't know what goes right to left. In terms of writing, it's left to right, right? But it's not Arabic. Anyway, this curve shows the general pattern of this top, right? It's a rounded top. That's indicating reversal. This is on the 45-minute time frame, and that is about 1 day's worth of price action. So that's legitimate, yeah? Just like in the video for perfect entries, and I'm actually going to link to that at the top right-hand corner of your screen right now. It's the same idea. When you're looking for an inflection point, when you're looking for a low and for price action to turn and change direction, you want a rounded top that basically signifies buyers and sellers consolidating, determining that, okay, that's enough of, price action in this direction. Now let's switch. So this is basically what you're seeing here. And for those of you who know pattern analysis, this is an M top, or a double top, double M. It's not a double M; it's a single M. But I know a lot of people call it a double M, but it's basically a double top, right? And the double top is bearish, meaning it's a bearish pattern, signifying a move to the downside. And you can typically measure that by finding the height of one of the tops and superimposing it from the side of breakout. And so that would give you something like that. Let's just do that really quickly. So that would be from here. Well, let me turn off the magnet. To there. And boom, that's a neckline. So you should get something like this, right? Something like this-ish. And I didn't measure these. Okay, so let's go back. Okay, so we're on the 45-minute time frame. We saw that Bitcoin went up in an impulse, really, really strong impulse, right? 5 waves up. And then what we saw is something interesting. And this is where you get your edge as someone who knows a bit about market structure, who knows a bit about how price action works, okay? This is called, in Elliot Wave theory, an irregular flat. Ralph Nelson Elliott called it, or it's also called an expanded flat, okay? And an expanded flat is, right, we all know, let me change the color here and to make this more visible. Let's do something more loud. Like, okay. No. Sorry. Yellow? Okay, yeah. Okay, everybody knows, and because I say this ad nauseum every day on this channel, corrections happen in A, B, C patterns, okay? That's all corrections. Now, it can be a flat correction, it could be a zigzag correction, it could be a running flat, it can be an expanded flat, right? This is an expanded flat. The pattern of this is 3, 3, 5. What does that mean? That means there are 3 waves in A, 3 waves in B, and 5 waves in C. Do you see the 3 waves in A and B? If you don't, I'm going to draw that out very quickly. And this is your edge. These are all tradable. And I'm not saying that just because I've literally been trading this whole correction. And, my entries aren't always flawless, but I haven't lost a trade yet. And it's not because I have a crystal ball. It's just because these patterns have all been traced and kind of sort of written out, right, by people who have looked at price action for quite some time. Let's see. Okay, I know it's a little noisy, so let's zoom in and see. So it's a 3, 3, 5 pattern, okay? And so basically what I've done is I didn't mess with this much, this A wave, because this is the A wave, right, of the correction, because there's not much amplitude there. I know that in an expanded flat, which is actually quite common as a correction in a bull run, for bullish patterns. And actually, the B wave, this is super bullish. Why? Because the B wave is meant to top out at 1618 of the A wave. And if you measure the B wave if you pull the Fibonacci extension from the A wave, the B wave far exceeded the 1618. It went all the way to the 3618 almost. So that's how you know Bitcoin it means business. And I know that a lot of these rules, these kind of guidelines were made, Ralph Nelson Elliott, he devised them from reading 75 years worth of material, or studying 75 years worth of material from the Dow Jones Industrial Average. This crypto stuff is not the Dow. This is something we've never seen before. So these assets and the way they behave may sometimes break the rules. And so at the same time, learn these rules, learn this theory, but take it with a grain of salt. Always respect the market for its capriciousness. Always respect the market for the inherent entropy, the chaos that's inherent in it. It can do whatever it wants, whatever your books, whatever any analyst or any influencer says, It can do whatever the hell it wants. All this does is give you an edge. Okay, all this does is probabilistically make it so that you're likely to win your trade as opposed to someone who ignores this information. This is how you use that information. I hope that's clear. You still have to use stop losses. You still have to practice a proper risk mitigation. So please don't get wrecked because you think that this is bulletproof, right? Case in point, this is not supposed to happen. This should have invalidated this whole pattern, but Bitcoin is something we've never seen before. So A, B, and then the C wave of this B wave, right? Boom. So that's three, and then 5 waves down. So according to this expanded flat theory, the 5 waves are meant to go down 1618 of the B wave. Okay, so let's take this down. Oops, not that. I know that when charts get noisy, it's hard to make sense of things. Now let's take the 1618, inverse 1618, so bottom to the top, right? Let's turn our magnet back on so we're precise. We catch the bottom. Oops. There we go. Catch the bottom. Catch the top. Okay, so see that? I have it projected at the 1618. So the correction right now, as the charts are showing us, is saying that Bitcoin should go to around $47,203. That should be the end of our correction. Okay, and this is why I said yesterday in yesterday's video and previously that it wasn't a good time to enter along on Bitcoin. This is short season, right? And I know not everybody's comfortable shorting in a bull run, especially an asset this crazy, right? This parabolic, right? An asset that breaks rules in its B waves. And back to what I was trading. I didn't trade the A wave, but I traded the hell out of the B wave. Look at this. Even considering it was going to go to the 1618 of the A, that's great profit, right? And then turning around and shorting that after that B wave's finished is what I'm doing right now, right? This short, I'm not shorting Bitcoin, I'm shorting Litecoin, just like I said in yesterday's episode. I mean, if it's 14, 15% in Bitcoin, imagine what it's like in another altcoin, right? So that's what I'm doing personally. And I like being able to play both sides. I obviously want the price to go up eventually, but I like to be able to make money regardless and trading high probability moves. And when you learn to do this, and actually personally, I didn't start being profitable trading until I was comfortable going both ways. I actually don't care. I used to care. I used to only want the price to go up because I knew that I was only good at longing or decent at longing. I was shit at shorting, and I would lose money repeatedly shorting because I didn't know how to enter a short. I didn't know the anatomy of a correction, which, there are a lot of corrections. You need to open up a book. You need to, read a bit about the different types of corrections to be able to short properly, because if without that information, you're going to get stopped out, you're going to get liquidated, because shorts by definition go up and down and up and down and up and down and up and down, and with high volatility, right? This B wave probably stopped or liquidated a lot of people, and that's what it's designed to do. In an expanded flat, this B wave catches the retail investor, the casual investor, unaware, because they're like, ooh, it's going down. Psych, it's going up. And then a lot of people get in on this. Oh, it's not finished yet. Yet this is just a B wave. This is literally the middle of the correction. And what ensues is a heinous 5 wave down. Okay, so that's why you want to learn this stuff. And again, keep everything in context. These are just rules and guidelines to give you an edge, a probabilistic edge, to be able to win more than you lose. And if you win more than you lose, you're profitable. If you're profitable, then it's worth doing. It's worth trading, right? If not, you're going to be like 95% of people that pick up a computer or a phone or whatever to trade crypto, you're going to lose. You're going to give money to the exchange. Don't do that. Learn, learn, learn. That's what this channel is for. And if you like that, you appreciate this kind of information, like the video, share it, subscribe, comment, do all that good stuff. All right, so that's Bitcoin. That's where I see it going. It's super bullish because you see it's so hesitant or reticent to correct, right? It just won't go down. But when it goes down, trust me, it will go down. Now, let's quickly go into my Litecoin trade and see what that's doing. Just to give you an idea, I entered so yesterday, so same thing, right? 5 waves up, right? And then we have an A wave that happens in 3 parts, which goes down. I'm not going to label it, but I hope you see it. A, B, C. That's A down. And then a B wave that runs counter to the A wave. And that's your expanded flat, right? That's where everybody thinks, oh, the trend is continuing. We're going to the moon. We're not going to stop. Corrections be damned. That's your B wave that runs on the A wave. And in Litecoin's case, let's measure the length of our B wave as with respect to our A wave. And the B wave in Litecoin's case did finish around the 1618, okay? So that's more in line with the theory. However, and I've said this before in previous episodes, if you took the letter of the law and said the B wave should only go to the 1618, anything above would invalidate it, and you set, for instance, you were shorting, you wanted to enter a short for some reason at the top of the B wave, and you set your stops really tight, right above the 1618, you would have gotten stopped out. This is why crypto's another beast. We have all of this technical analysis, these tools from traditional finance that we apply in cryptocurrency, but we have to understand that we're in a game of our own. We have to rewrite the rules in crypto because these assets do not behave like traditional financial assets. This is case in point. You should not have it says in theory that these assets are only meant to, the B waves only meant to go between 1236 and 1618. I consistently see assets breaking the 1618. Bitcoin just went to the 3168. So just, I'm hammering that down. I hope you really understand that. Use these with a grain of salt. Crypto's uncharted territory, okay? And so we got our B wave. Now we're getting our C wave. That's 5 waves down. Same with Bitcoin. We're going to use the inverse of the B wave, the inverse 1618 of the B wave to find where our correction will end. Our 5 waves down of the C wave of this ABC expanded flat correction. And that for Litecoin is 149.92. Okay. And that is confluent with what we see here, some support, right? A support line where the 1 wave ended. So that's confluent with that. And in Bitcoin, just really quickly, you see confluence with the 4th wave, and that's actually common. Wrong Bitcoin chart, this one. So you see the 4th wave is usually a very commonplace to end correction. So if you go up 5 waves and you come down 3 waves, usually the ABC correction down finds its support at the 4th wave. And here we have tons of support because remember, we had that extended 4th wave where we built this huge bed of support. So that makes sense, right? It makes sense that price action would be attracted down back to this bed of support here at the 4th wave. That's it for me today. Hope that was helpful. Hope that was useful. Trade safely. If you're trading, use my Phemex referral link. That's my exchange of choice at the moment. And see you guys tomorrow.